Month after month, I'm getting paid around $1,000 for doing nothing, purely from passive income. In this video, I'll be talking about my passive income portfolio. So my current investment portfolio is heavily into dividend ETFs and covered calls ETFs. In this video, I'll break down my portfolio and how I got from $0 to $1,000 per month of passive income. I literally don't have to do anything, and no matter what happens, I'll be making that $1,000 at the end of the month. I'll be going over the basics of dividends and covered calls, how I built my portfolio from scratch, why personally I prefer income versus growth, and what's the difference between passive income in the stock market or passive income with real estate, because most people, they want to buy real estate if they want to make passive income because they want to rent out an apartment or a house. So I'll be comparing these two. All right, let's get into it. So I just want to cover dividends and covered calls ETFs. I know most people already know what dividends are. Covered calls, maybe not, but let's go over dividends real quick. So dividends are cash payments company sends to shareholders. So you're basically getting paid for holding shares of a company just because you invested in it and just because you held that stock. Usually they pay quarterly, so every 3 months, or they pay every month, depending on the stock. These dividend-paying stocks, they're often found to be stable and mature companies. Usually they're big banks, utilities like electricity or materials, REITs, so real estate, etc., etc. They tend to have lower yield and be more stable and have good growth and good dividend growth year after year. So they're very good to start a dividend snowball and really build your passive income. Now for covered calls, that's where I switched up because I used to be all in on dividends, and when I learned about covered calls and how they actually worked, first I thought they were very risky and it was something crazy because they're selling options and I had no idea what that was. But when you really understand what it is, you'll see that it's nothing crazy and it's actually very safe. So what's a covered call? It's a strategy where you sell a call option on a stock you already own and you collect a premium at the end of the month. So you basically set a strike price, and if the stock does not go above your strike price, you keep your shares and the premium. So for example, you have a stock that's worth $100 and you set a strike price of $110. At the end of the month, if the stock is still worth $100, you keep your shares and you get paid that extra $10 per shares. So you keep all your shares and you collect the $10 difference between 100 and 110, and that's called premium. So on each shares of that stock, for example, you would make $10 of cash. So this is a bullish strategy because obviously you only want to sell covered calls on companies or underlying indices or whatever that you believe in the long run, because the point of covered calls is that you want to collect premiums, but you are also keeping your shares month after month. So this is a bullish strategy, and also there is no risk. The only risk is that if the market goes above your strike price, you'll be losing on the potential gains. Let's say your stock is worth $100 and you put a strike price of 110, and at the end of the month, the price climbs up to $120, you would still make $10. The other guy who just held his shares without selling any options, he would have made $20 without having to do anything. So the only downside is that if the stock goes up very fast, you might miss out on the upside. But at the end of the day, you're always making money, and the only risk really is that you might miss up on some upside. Covered calls, basically they allow you to earn passive income on anything. It could be an index, it could be a dividend stock where you could earn dividends and income from your premiums. So covered call just adds another layer of passive income. Okay, now for my personal journey, so how I got there. Basically in 2024, I went all in on dividends in the beginning of the year, mostly dividend ETFs and a few single stock big banks in Canada. I had a little bit of covered call ETFs, but I thought they were very risky and I didn't know how they worked, even though I kept seeing them paying me a lot more than my dividend stocks. I saw that they were still growing because in 2024 we had a strong bull market. So at about 4% yield in general, I was able to build a passive income stream of about $200 to $300 mid-2024, I would say. Then as I was reading about covered calls and I learned how they work and how they can generate an extra cash flow while still being safe, I switched a lot of my positions from classic, more traditional dividends, which have a yield of 3 to 4%, to those covered calls ETFs that were based on the S&P 500. So they sell covered calls and they hold the S&P. So I know that the S&P in the long run is a winner, and I don't want to put all my eggs in one basket. I decided to invest heavily in S&P 500 covered calls, which have a yield of about 12 to 14%, which is around 1% a month. And from there, I rebalanced my whole portfolio, and I was able to reach around $700 to $800 a month just with my covered calls ETFs. And then around November and December of 2024, I was mostly in covered calls ETFs, and all my active contributions were going towards covered calls ETFs that were based on the S&P 500. So currently, I am making around $900 to $1,000 a month in passive income. So most of my income comes from S&P 500 covered calls. Then I have VDY, which is a Canadian dividend ETF from Vanguard. Then I have other little holdings left and right. I have SCHD, I have Realty Income, and I have some more risky volatile ones that pay weekly. I have YMAX, I have QDTE, which sell options on the NASDAQ. So how I built to $1,000 is essentially I invested super aggressively, and I was reinvesting everything that my portfolio was generating, and I still am. So let's say you have a yield of 12%. That means that if you're able to invest $1,000 every month, it means that on the next month, you'll see an extra $10 of income. If you invest $10,000, you'll see an extra $100 a month. If you invest $100,000, you'll be buying $1,000 a month of passive income. So this is the beauty of compounding, and the beauty of covered calls ETFs is that it goes very fast. It allows you to add more cash flow on top of your 9-to-5 job without having to wait 30 years for your portfolio to reach I don't know how many millions and then follow the 4% rule, or just have a 3 to 4% dividend yield on your more traditional stocks. But even though 12% is a high yield, it still takes a lot of time to reach $1,000 a month in passive income. You still have to work your ass off and contribute as much as possible and as aggressively as possible. Especially now when the market dipped a little bit, you have to buy as much as possible and keep buying. And every single month I was investing like I had to pay bills. I was putting $3,000 to $4,000 every single month in the market, and I still am doing the same. On top of that, my portfolio now is generating around $900 to $1,000, which gets reinvested. So if I invest $1,000 from my own money and my portfolio generates $1,000, then in total, it's like I'm investing $2,000 a month. And if you keep building that income stream, at some point, your portfolio will be generating more money that you can actually contribute from your 9-to-5, and that's where it gets crazy. So why I pick income instead of growth? The thing with growth is that it focuses on capital appreciation. So you make money when you buy low and you sell high, and when the market goes up and goes down, the value of your portfolio goes down and you don't receive anything. So it's very good for long-term wealth, but it doesn't pay you as regularly and as consistently as covered calls ETFs, which pay 1% every month. Comparing that to income investing or high yield investing, I personally focus on cash flow. So I see the cash flow before the value of my portfolio. So if my portfolio is generating $10,000 a month, I don't care if my portfolio is worth $1 million or $10 million. I rather have cash flow with a stable portfolio, because at the end of the day, I pay the bills with cash flow and I don't pay the bills with my portfolio's value. I don't want to have to sell shares. That's how you can achieve financial freedom sooner, rather than waiting for your retirement or waiting to have a certain amount in your portfolio to allow yourself to let loose and spend a bit more. So yeah, essentially the reason why I like income is because I want to have more cash flow, because I'm currently not making $20,000 a month and I'm not balling. So that extra cash flow could really save me. It could help me pay bills, or if one month I have an issue with money, then I can go use my portfolio's income instead of having to pick into my savings and stuff like that. So it could really help me pay the bills, but for now I'm just reinvesting everything and letting the compounding do its magic. So now just to compare this quickly with real estate, the thing with real estate is that it's pretty similar. It's very similar where you get cash flow through rent. So every month you get paid rent, for example, and you can leverage your assets to buy more assets, and also your assets are tangible. But the problem with that is the upfront cost is huge. You can't just invest $10,000 like in the stock market. You have to put a big down payment, and then you have to file all those papers, pay taxes, pay fees to lawyers, to brokers, to whoever. You have to pay for maintenance. That you can have headaches with tenants who break everything. You can have vacancies. You can have management issues where they don't want to pay, or they're rude, or they're breaking everything. And it's not liquid. You can't just go tomorrow and sell a house for $1 million. You're going to have to put it on the market, list it, work with a broker, have people come, negotiate, see the house, waste your time, everything. You can't just liquidate whatever you want. Or in the stock market, you can just start with $10,000. It's truly passive. You put 10K and you don't have to do anything, and you receive your money every single month without having to receive a phone call or deal with a tenant or anything, or deal with taxes or with property fees. The only problem is market volatility. So this is more like where emotions come into play. Like you can open your app and see you're down $1,000, and that could mess up with your head, and you might have to panic. You might want to panic sell. Or when you own a house, if the market crashes, you can't really tell. You can't really open an app and see, oh shit, my house went down $10,000 in value. So it's easier on the emotion wise, I think. But like when you invest money in the stock market, you know the risk, and it's part of the market. If you think the market goes up every single day, then you shouldn't be buying stocks, because you're going to go crazy. Especially right now, it keeps going up and down with everything, with the tariffs and whatever. And also the risk is that dividends are not guaranteed. Income from options is not guaranteed. Like if you go read about those ETFs in their papers, they always say that their distributions are not guaranteed, even though they always pay them. Just by law, they have to say it. It is possible that if something very bad happens, they don't pay, or they reduce their dividend payments for some X or Y reason. So that is a risk. I mean, at the end of the day, nothing is risk-free. Maybe just treasury bills or bonds. But yeah, it comes. That's what comes with investing in the stock market. All right, so that was it. I just wanted to make a quick video to kind of tell you guys a bit my background and how I make $1,000 a month doing nothing, and my style of investing. I hope you guys enjoyed this video. Let me know in the comments if you have any question, or you want me to go into something more into details, or show my portfolio or whatever. So yeah, I'm currently making around $900 to $1,000 a month, and I plan on building this more this year and investing more and more and more, and letting everything compound. Especially now the market is tanking a bit, so I'm investing like crazy. So yeah, feel free to leave a comment. Let me know if you guys are making any passive income right now, and if you have any thoughts or ideas, I'll just answer. Or if you have any questions, I might use your question for a future video. Feel free to like, subscribe to support me. I only have 6 subscribers, so trying to grow a little bit. So yeah, until next time guys, take care.